Well, the action continues here in the ag commodity trade. I'm Marlon Bowling with you, the tour guide to the ag commodities, and we're joined by Todd Bubba Horwitz of BubbaTrading.com in Chicago. And we had the markets on the grain side really selling off big time overnight. We had several contracts, corn, soybeans, and wheat, all hitting at least 20 cents lower. The corn, I think, actually hit a limit down on a couple of contracts overnight, but then they came bouncing back after we opened up our daytime session. Let's look at where we are now. In the corn, in our quotes provided by Bar Chart, we have the July bouncing back to 6.50 and a quarter. We're down only 4 and a quarter cents now. December still down a dime at 5.52 and a quarter. And in that soybean trade, on soybeans, we have the July contract 5 and a quarter higher. We're at 15.24 and 3/4, back within 4 cents of our high of the last evening and early morning trade. November down 3.5 at 13.39 per bushel. Well, let's look at our wheat market in Chicago first. You have July now trading 7.5 cents lower. We're at 7.25 and a quarter. That's still about 14 cents off our earlier low. In the Kansas City market, you have that July contract 9 3/4 lower at 7.01 and a half. Still hanging on to that $7 mark after dropping down way below it in the overnight trade. July Minneapolis wheat down 6.5 at 7.40 and 3/4. Cotton market had some profit taking as well. July down 112 points at 90.30 cents per pound, back up above 90 cents. So Todd, what's your take on this choppy action? The market's bouncing a bit here early on so far in the grain trade, but is that one to be a little wary of? I know a lot of folks were talking about jumping back in there the first chance they got, but is this what some would call a sucker move to get some people in there and do some scalping?
No, I think this. Look, as we've said almost every week, I think they're going a lot higher, a lot more room. You look at all of the surrounding circumstances. Economies are opening up. We're getting more volume. We're getting more demand, and you've got more money out there looking for places to invest. So you put all those things in a ball, and you're going to get these bigger rallies. And I think, look at you get a sell-off after the rally we've just seen over the last 4 or 5 days. You're going to get some pullbacks. And I'm surprised at how strong they were today and how fast they came roaring back when you look at the bigger picture, as you were mentioning. But I think it was a little bit of early profit-taking followed by buyers. I mean, even cotton has cut its losses in half from earlier this morning. So, to me, this is nothing more than another buying. Every dip is a buying opportunity until the trend changes. And right now, the trends are extremely strong and to the upside across the board. And I see no reason for that to change anytime soon. Eventually, someday it will, but I don't think today is the day.
Interesting stuff. And yet the commodity funds, the fund managers and managed money managers out there, they are really hanging on to some big long positions for the most part, from what I understand. Todd, thank you for talking with us. We'll let you go for now, and we'll talk with you again real soon. Todd Bubba Horwitz, BubbaTrading.com in Chicago. We'll return with a look at our livestock trade as we get toward the mid-session right after this.